Let's have a look at where the markets could be headed. We're going to do that in the company of Lorraine Tan. Lorraine is Director of Equities Research at Standard & Poor's in Singapore. Lorraine Tan, thanks for joining us. First of all, what do you make of what we've been seeing of late? How much is a hard landing in China being priced in? And do you buy into it, or do you think things are going to be better than anticipated?
Well, on the whole, starting from a global perspective, we're in a camp where we don't expect a double dip for the U.S. economy, and also, much of the Eurozone, particularly the North, outside of the troubled states, economic are doing pretty well. In this regard, we think global growth will still continue, and that's going to propel China growth. So we still don't expect a hard landing in China to occur. We do think things will moderate, and they should, given that the government has been cutting it down on a lot of excesses. But based on that view, we do think valuations are actually relatively attractive right now.
Okay, well, what about where you invest, I suppose? I mean, it's not broad-based. What about the banks, for instance? The new Basel requirements, of course, are setting the mood music at the moment.
Yeah, I mean, if we look at what's going on with the banks, most of the banks in our coverage, particularly we're talking about this part of the world, Asia Pacific, we do think the new requirements should be easily met by the banks. A lot of the regional banks already meet the minimum 9.5%. We do have some banks in our coverage, some of the Australian banks that are just shy of that. But, the classification of what constitutes a large bank, it's highly unlikely that they're going to be imposed with the maximum 2.5% on top of the 7% level that regulators are recommending. But having said that, I think the local authorities may still want to impose their own benchmarks as well, because while these are not, internationally, significant banks in that sense, they're still very significant domestically in any regard. So on the whole, if you're asking us about banks, we do have a preference for China banks at the moment, because we do see a lot of risk having been reflected into current share prices.
Lorraine, okay, we've also got that austerity vote in Greece there. That could come and spook the markets as well, couldn't it?
Well, that's been going on now for the past few months, and we're probably at the zenith, almost the zenith of it, yes, these coming days. So we're still going to have to watch out for that. I think it was positive overnight that the French banks have agreed to do a rollover. I think the idea is to get some compromise to avoid that default. Having said that, I think arguably, some of the bad news has been discounted in that sense. Whether or not it permeates as significant as what we saw with the financial crisis in the States, we don't expect it to be as bad as that. Obviously, sentiment is going to be hit if, in a worst-case scenario, if there is a knock-on effect to the rest of the southern European countries, obviously, that are facing problems. But we do think it's a more contained situation this time around.
Yeah, this week sees the end of quantitative easing, the second round of it, of course, in the U.S. That looks like it's pretty much been factored into equity markets. What do you worry about most looking ahead? Well,
we're expecting we are expecting some estimates reductions and cuts by the analysts in the marketplace. I think to a large degree that's been talked about, so it's probably somewhat discounted in share prices. But, people are still going to watch to see what happens when the 2Q results come out, in terms particularly of margin pressures, rising costs, how well the companies cope with that. And on top of that, you're probably going to be looking at some disappointment on the top line side. So we still also have to get through some of these issues coming up. We still also have to get through the U.S. budget discussions that were slated in August, and I think that's one of the reasons why we don't expect the Fed to say very much about what their plans are until we have some idea what the budget cuts in the States are going to look like.
Lorraine, nice one. Thank you very much for joining us. Lorraine Tan from Standard & Poor's, just looking at Asian equities, also just looking at the global environment at the moment for investing. We've got to take a break.